Welcome to Know Your Money, where we will explore our relationship with money and how the psychology of it impacts our financial decisions, as everyone thinks about money differently. In our podcast, we'll be presenting a variety of financial topics in an easy-to-understand way, which we hope will assist you with managing your money. Hello, everybody. Welcome to Know Your Money. Craig, Warren, how are you guys today?
Excellent. And you, Bron?
Very good, thank
Warren?
you.
I'm well, thank you, Craig. Nice to see you, Bronwyn. Nice to see you.
And I see we have a guest in the studio. Aren't we lucky
do.
today on Monday?
Absolutely. So we have Guane, who is an offshore specialist at Allan Gray. And we thought she'd come in today just to have a little chat about offshore, like when would you invest offshore? Why would you invest offshore? Those kind of questions. Because I think there's a lot of noise currently about like, I need to put all my money offshore kind of thing. So just addressing that.
So what do you mean by offshore?
Guane.
Hello, Guane. Sorry, we didn't tell her.
Hello, guys. Thanks for having me.
All good. So what do you mean by offshore? What does offshore mean?
So offshore, so in terms of investing, so obviously here in South Africa, it's often said that home is where the heart is, right? So when it comes to your investment portfolios, it's often skewed towards holding South African exposure in terms of the funds that you have access to and what those funds invest in. Very much skewed towards investing in South Africa, which is an emerging market, right? But there's this big world out there, right? And South Africa is less than 1% of global GDP. So you are quite limited in terms of what you can invest in South Africa, invest in and here in South Africa. So if you want more exposure to different geographies, different types of companies, different currencies, you would look to invest more of your money offshore.
Okay. That definitely makes sense. And I think, you know, especially for us, like when we're building our clients' model portfolios, like when it comes to allocating funds, we do take a certain percentage and use offshore funds, but within that model portfolio. So, you know, if someone comes and invests in us, they're not just investing in the JSE or just in cash. Like there is some offshore exposure, but I think some people might feel that they need all of their money offshore, or like what portions would you say like should be offshore, or like if a person is going to live in South Africa forever, what should that kind of look like? If they want to immigrate, like when and how? Does that make sense?
100%. And I think you touch on a few things there. And I think it definitely comes down to client-specific needs. Like you said, whether a client is going to be living here in South Africa and their liabilities are in rands in South Africa, whether they're looking to move offshore or move overseas eventually, or their kids are going to go study abroad, or they just want to take an overseas holiday. So it really comes down to your individual client's needs. But just looking at a client's investment portfolio, yes, say we live in South Africa and we've got a typical investment portfolio here in South Africa. And you say you run model portfolios, right?
Yes. Yeah.
And you would construct that around a client's specific needs based on how much risk they can take on, etc. So within the funds that we have available here in South Africa, they already have offshore exposure, but I would call that indirect offshore exposure. So it's already within your fund. Okay. And a lot of the fund managers that you're investing in can invest up to 45% offshore, right? So you already have that indirect offshore exposure within your portfolio. But that's all based in rands. Okay. So although you're investing in offshore assets, your actual investment is based in rands. Okay.
So
you
it
can
comes
pay
back here, in other words.
100%. So when you withdraw in rands.
Right.
Okay.
Does that mean, so a product, let's say, that Allan Gray offers, the investment managers have the ability to invest in foreign assets, but ultimately your portfolio is seen in rands. It's not seen as you own the asset foreign. You own the product that Allan Gray is you bought into.
100%.
Okay.
So I'll kind of explain that in two ways. So if you want to invest indirectly offshore, so you're investing in rands, but you've got exposure to offshore assets, there's two ways you can do that. So one way is already through most of the balance funds available in South Africa, they can invest up to 45% offshore. Okay. So you've already got offshore exposure through your typical balance fund. Then you've got what we call an asset swap or a feeder fund. So all of your exposure there is in is exposure to foreign assets, but the actual investment you're making is in rands. Okay, so you're not utilizing your own offshore allowance. You're using the company's offshore allowance to invest offshore, but that investment is still based in rands. When you make a withdrawal, it is withdrawn in rands. If you make a contribution, it's made in rands, but you get exposure to offshore assets.
So in other words, they're investing it offshore, and then when they bring it back, they convert it back to rands.
Exactly.
Okay.
And then, Warren, do you remember the episode where Ashley came and she said, like, you can put R1 million offshore and then the 10 million rand?
Yeah.
This way of investing, you're not eating away at that million or the 10 million.
Yes, because like you said, it's the company's allowance.
Exactly.
Yes.
Yeah.
So from time to time, that company can run out of their allowance, offshore allowance. So you'll notice that the Allan Gray feeder funds, what we call them, or asset swap funds, will be closed because Allan Gray has run out of offshore capacity.
So is it a percentage of the company's sort of size that is your fund that you're allowed offshore?
Yes. So within the balance funds, it's 45% of the total assets in the balance fund.
Right.
And then the company's actual allowance across all of its assets is also 45%.
Oh, okay.
Yeah.
But what are we talking about today is what you specialize in is direct offshore, correct?
100%. So
Yes.
that's like I said, indirect offshore exposure to me. Then those clients that actually want hard currency exposure. So you're investing in dollars, pounds, or euros. That's when you're taking your money according to your own allowances. So that's your R1 million per calendar year or the 10 million rand per calendar year, your own allowances to invest offshore, but you're exchanging your rands into foreign currency. Okay, so your exposure is in hard currency. When you make contributions, you make those contributions in hard currency, so in dollars or euros or pounds. And when you withdraw, you're withdrawing in hard currency as well. Okay,
So you don't need to bring that money back here.
you don't, unless you want to.
Yes.
I mean, those are the type of savings that you have for your kids wanting to study abroad. If you're going on holiday, you've got hard currency offshore exposure, or if you yourself are looking to immigrate offshore. It doesn't mean those are the only reasons why you invest offshore.
Yeah.
You also you are protecting yourself against an emerging market currency, which is the rand, which is depreciating over time. As we know, the rand can be very volatile. So to protect yourself against the depreciating rand over time, you would have hard currency exposure in whichever hard currency you choose to invest in.
So just a question, so if you are a person that lives in South Africa, you want to kind of always stay in South Africa, when would you suggest that person invest in hard currency, or would you? I know every individual person is different, but I feel like often people, they want to stay in South Africa, but then they want to put everything offshore.
It's mostly, we've seen this increase in demand for offshore investing in the last couple of years, and that's been driven by a few things, right? One being clients are kind of fearful about what's happening in South Africa. So to diversify away from the economic and political risk in South Africa, they want more of their assets offshore to protect themselves, right? So, but also besides just diversifying away from South Africa as an emerging market and all of the things we experience here, it's also for those clients. I mean, clients are becoming a lot more globalized, right? So clients are either whether they're living abroad or working part-time abroad, or they're sending their kids abroad to go study abroad. Those are the types of clients that are building more hard currency assets and having that hard currency exposure.
Then just, I can't remember what her surname, but Di something.
Seckham, yeah.
Yes, you hosted an event where she came and spoke and about people that have money offshore. So if you do immigrate, I can't remember what the term is.
Financial immigration, yes.
No,
yeah.
I don't know if that was the right term. I feel like that's what you're not supposed to say.
Exactly. So she said you no longer can refer to it as immigration or financial immigration. It is now ceasing to be a tax resident.
That's the one. Do you see?
There you go.
So when you cease to be a tax resident, any of that offshore money that you have saved, there's capital gains tax right on some of them.
Okay, yes. So what, when you leave South Africa?
Yes.
Okay, yes.
So when you leave South Africa, it's like as if you've passed away.
Yes.
And everything that you own, you have to sell. So say it was your house. If there's capital gains tax liable, you'd have to pay it to South Africa. Mm-hmm. And one of the things I'm pretty sure she mentioned was that an endowment is excluded from that, right? So if there are these people that are trying to immigrate, that would be a tool, correct?
Yes and no.
Okay.
And the reason why I say that, so when you cease to be tax resident in South Africa, you pay what we call an exit tax. So it's deemed as if you had died the day before, and you're getting rid of all of your assets. Okay. Offshore endowments are excluded in terms of the regulation around what triggers capital gains tax when you immigrate. Okay. But is an offshore endowment really the type of vehicle that you want to be invested in if you are now immigrating to a different country? Not necessarily, right? Because an endowment is taxed by the life company in South Africa, okay, according to the rules that govern endowments in South Africa. Yes, you get a reduced tax rate if you, let's say you're in a tax bracket higher than 30%. Endowments are taxed at a flat rate of 30%, which translates into a capital gains tax of 12%. Now, if your marginal tax rate was more than 30%, right, this product would make sense for you as a South African tax resident. Because as soon as you immigrate to another country, there could be additional taxes paid. Because remember, the taxes are paid by the life company here in South Africa when you withdraw, okay? Or any trigger event around an endowment, which is switches, when we withdraw for fees, or when you just take proceeds from the endowment. We will take our 12% capital gains tax and we will pay that to SARS. If a client is now living in a foreign jurisdiction, they've immigrated to Australia or the UK or the Netherlands, okay, we've taken our 12% tax. Now you receive proceeds in your new jurisdiction. You could be taxed on those proceeds again.
Correct.
Okay. So is it the right thing for clients who are immigrating to another country? Not necessarily.
So that's a big thing, I think, that people do need to understand, and maybe we can do a whole episode on like which ones they can invest in for those kind of things. But yeah, good point, right?
But also you got to be careful to say all my money must go offshore into another currency, another geographical area, because you could get the rand trading at 18 today and then a very favorable outcome on the election and it goes back to 15. That capital loss is huge, and we've had that over many periods. So you've got to be very mindful of that the currency can go right against you. It's not always the fact that it's going to go. Maybe over 20 years you're going to have a depreciating rand against the dollars, etc. But who knows? It may go the other way. So if you're living in South Africa, you should probably only have about 40% of your assets offshore.
Look, always when we start talking about the rand exchange rates, I mean, like you said, over the long term, the rand is going to depreciate against, let's say, the dollar. As we've seen that happen since, over the long term.
Yes.
The rand depreciates against developing market currencies like the US dollar, okay? But in the short term, the rand can be extremely volatile, okay? And we've all seen that. We've all experienced that. But you shouldn't base your investment decisions on what the rand is doing in the short term.
Yes, correct.
Right? So if you are of the view that the rand is going to depreciate over the long term, right, and you are buying a hard currency asset, knowing that the currency is going to depreciate over the long term, sounds like a good investment to me. But in the short term, what we as South Africans do is we get emotional about the rand exchange
Correct.
rate, right? So you often get clients, one of the two is, we'll want to wait until it comes back to 14 rand to the dollar.
Yeah.
How long have we been waiting for that?
Exactly.
And the other thing is, like, when the rand really blows out, clients get fearful and all of a sudden they want to jump overseas. And then you are buying expensive offshore assets with a very weak rand, right? So you're almost paying double for that offshore asset. So we are fearful about the rand exchange rate. So I always say, why not take a more consistent approach, as you do with all of your other investments, and invest on a consistent basis, right? And you'll benefit from that rand cost averaging over time.
So you mean don't take the lump sum, rather break it up into different parts?
Yes and no. So when I say don't, so we only accommodate lump sum investments. We don't accommodate recurring or debit orders, but you can add lump sums on a regular basis. Yes, 100%.
So far.
But take the rand exchange rate out of the picture and just consistently invest offshore.
So I'm a South African investor. I want to diversify my portfolio a little bit more, put my money offshore, but I must realize it's not a short-term investment. It's probably a 7 to 10 year scenario, because the rand is volatile and that could make you emotional when you see, oh my word, the rand strengthened and my offshore funds don't look so good at the moment. Is that fair to say that?
100%. And also, even if the rand has strengthened, the opportunity that you're buying into offshore might not be the right opportunity or the right time to invest offshore. So for me, you've always got to weigh up the two.
Yeah.
You know, what is the cost of the rand exchange rate, but also what are you buying into offshore, and is it the right time to be buying offshore assets at that particular time?
And you say offshore assets, those are companies that are not in South Africa, such as Microsoft and Apple and
Yes.
Mercedes-Benz and Pfizer and
Yeah,
whoever
and
else.
those form part of your, like in the balance fund, they would
In the
be,
model portfolios,
Yes,
they
the model
would.
portfolio would be doing the
100%.
offshore exposure, not the hard rand currency.
Because you don't get exposure to those companies here in South Africa, right? So what you often do is you kind of give a portion of your money to an offshore manager, as you would do in your model portfolios, to manage the offshore, I would say, part of your investment portfolio, and they will go and find the right opportunities and choose the right equities that we don't have exposure to
Yeah.
here in South Africa, like the Apples, like the Microsoft, because we don't have a lot of tech companies here in South
Yes.
Africa. We very much kind of biased
Mining.
towards like basic materials and resources,
Sure.
whereas you get exposure to more tech and more other different types of sectors and companies available.
And
offshore.
those are fund managers, unit trust managers,
Yes.
whatever we like to refer to them, that are not based in South Africa. Those are unit trust companies we may not be familiar with.
100%. So Allan Gray has a sister company named Orbis, right? And they
Okay.
actually they've got offices across the world, and they manage the offshore portion of our funds, right? So you want a manager who's going to be managing your offshore assets to be globally focused and not in South Africa.
Correct.
Yes.
Awesome. So I'm going to put you a bit on the spot there, Warren. Do you know when and why you should invest offshore? How did you recap that?
Okay, first of all, don't panic. Don't
Yes.
do it because of fear. Do it for the right reasons.
Okay.
And definitely don't do it when the sentiment is the rand is tanking.
Yes.
Because you're actually buying assets and you're losing value in your purchasing power there. You like that one?
Yes, I feel like I can give you a tick on your...
Thank you. But ultimately, yes, you should diversify. You should have foreign investment. But I think what I got from that is timing is everything.
time in the market.
Time in the market, but also timing. You know, if in the short term, as you were saying, it's the rand is incredibly volatile, and you guys know that I still my business with the sound engineering for live is still based in the UK, and so when I bring money over, I time it. You know, if I have an alert set, so as soon as it hits 24 rand, it's like, yes, bring some money over straight away.
Yeah.
But, you know, so timing is everything, because from one day it can be literally 22.8 to then 23.8 in the same space of a week.
Yeah, but you're looking at in a shorter term to maximize some money here. That is fair, because you've got to look at that.
Most
bringing
people
back
that we're dealing with are sending it out.
for a
But
longer term.
are you talking about people who would have, say, a monthly debit, or people who would be using their annual allowance in a big chunk?
Yeah, so as Jean said, it's better if you can space it out, not that there's a
almost
debit
listen.
order, because you'll get the highs and the lows. And your sentiment at the time, there might be some person said something wrong over the news and people panic and the rand overnight goes
Understood, yeah.
right to the worst it's ever been. Then people panic. It's not the case. So if you do it consistently, you'll have a smooth transition overseas.
Yeah.
And you did it. You are doing it consistently, just the other way.
Yes.
Yeah.
You know.
correct.
So ours is just
Sending it out.
Yeah.
Yes. Yeah.
It's much nicer bringing it. Yeah.
Because if we wait for 14 rand to the dollar, we're going to wait for a very long time, right?
Yeah.
Yeah. No.
exactly.
And that's what I talk about rand cost averaging. So there's times where the rand's going to dip below 18. It's going to go above 19. Maybe you'll get a point where it dips below
So, yeah, I was
18,
talking
17.
to the pound as well.
Yeah.
Yeah, 100%.
Yeah. But no, I get it. I
But-
get it. So
Yeah.
I get why you say it, that you average it in the long term.
So
Exactly
7 years
right.
from now, 19 might look so cheap.
Yeah. 19 might be the new 14,
Yeah.
you know.
Yeah.
I remember 2 years ago when people were like, no, we're waiting for it to go below 17.
Yeah.
We're waiting it. And here we are 2 years later. And we're
Yeah.
like, oh, boy, we're going to hit 20.
So
Well,
I'm much older than all of you here. So my dad bought a car from Germany
Yeah.
a BMW, and he paid. It was cheaper to buy it, importing it from BMW, Germany, direct to here, because at that time you paid $1.10 for R1.
Sure.
You paid the $1.10, not the other way
Yeah.
around. It was amazing, eh? So,
That is crazy.
and that was the 70s.
Incredible.
Yeah. And not actually that long ago if you
Yeah.
look
Thank
at
you.
it.
Thank
Yeah.
you. All right.
We never know what's going to happen, right? So, like, the way you hedge your bets is just by taking a consistent approach. So you'll get
And I think, what was
The
the Orbis
average.
was the name of the sister company. So
Yes.
they're all based abroad. So
Yes.
they don't work in South Africa.
no. So Allan Gray himself started Orbis, but he
Yeah.
went over to Bermuda and started an offshore asset manager.
Yeah.
We still follow the same investment philosophy. We think the same way about how we buy companies.
But they're purely looking at international
Exactly.
Completely.
politics, everything going on, interest rates
100%.
from whichever central banks, what's happening, all that
Exactly.
stuff.
Exactly.
Because, I mean, if you look at what's going on in the world now, it's a pretty wild time.
Mm-hmm.
Well, you've got many conflicts in the world, a lot of arguing between very powerful nations.
Mm-hmm.
Who knows what could happen?
But that's exactly why we decided to have this episode, because we do think it is really important. And I think like the fundamental thing is to speak to your advisor and really just share everything that you do have with them so that they can see like what is your asset allocation? How much do you have offshore? How much do you have in rands? And each person's allocation will be different to what they're doing. If you're trying to move overseas, then as an advisor, we would recommend certain amounts offshore. If you're going to stay here, we'd recommend that. So I think it's just speak to an advisor is probably
if you look at
win.
An extreme example is what happened in Zimbabwe. I think a lot of those people who were forced out of the country, forced off their farms, would probably wish they'd had, if they didn't have, wish they'd had some sort of offshore investment.
Yeah,
Because stuff can just happen.
exactly. But you've got to, again, hedge bets on both sides. It can be, things can go well or they can go bad. And it's just being safe all round. And that's where asset allocation and like getting the right advice is important, I think.
I totally agree with you, Brennan. I think speaking to a financial advisor to understand your specific situation and how many of your assets should be in South Africa versus offshore is very important.
Yeah.
Because most investors go on fear, like we have a
100%.
Zim
Yeah,
situation,
no.
take
Yeah.
all my assets offshore, and
Yes.
then you've got nothing left in South Africa to pay your liabilities here.
Yeah, correct.
That's
Yeah.
also not the best
Like
way
life,
to
it's
go.
balance, isn't it?
Exactly.
Definitely. Cool. Thanks, guys. That was a good one.
Yeah.
We'll see you for another one to explain how people can invest offshore, I guess.
Is it next Monday or we got a slot?
Possibly.
Yeah,
Okay.
we'll see how we go.
Good. Okay,
Awesome
everybody.
stuff.
I'm sure, yeah.
Okay.
Thank you for coming.
Thanks,
Shanae,
guys.
thank you.
Pleasure.
Bye.
Bye. Thank you for listening. If you have enjoyed this podcast, would like to subscribe, please visit our website www.growthfp.co.za. The information we have provided in this podcast is our personal opinion. For more detailed information, please discuss your financial situation with a financial planner.